What is going on, everybody? It's your boy Kelly from BWR, and I just kind of want to go into how to analyze the stock. I think this is going to be important, especially coming up in 2020 and 2021, when I suspect we're going to be in this bear market for a little while, man. And with this bear market, to explain what that is we're down 20%. The stock market is down 20%, and so what that means is there's a lot of stocks on discount, but not all stocks are on discount, and that's something to truly understand and to know that you got to analyze the stock. And so I kind of just want to go into exactly how to do that. So step one, I suggest everyone find the company that you feel comfortable with, that you somewhat know. You might not know the full details of that company, but you're interested in. It's on your mind. Maybe it's Apple because you got an iPhone. Maybe it's Disney because you got Disney Plus. Maybe it's, I don't know, Home Depot. You go to Home Depot a lot. I don't know. Find stocks that you are comfortable with, that you know you're familiar with. You might not know the full details of that company, but you are at least familiar with. Then the next step would be to find their 10Q. The 10Q is a document that the company has to send to the SEC, and it is a public document, meaning you can search Apple 10Q and you can find their actual 10Q regulated document that details their income, details their actual percentages, the profit margins, the debt that they accrued, the acquisitions that they may have made throughout the year. The 10K is a regulated document that they do, that the company has to submit to the SEC for the entire year, fiscal year, their fiscal year. And this is important to look into to understand the company. You want to make sure you understand the company that you're going to invest in. So if you're interested in, I don't know, Home Depot, you need to make sure that you understand what they're in the business of. What products do they sell? How do they actually make money? What are their expenses? What acquisitions have they made recently? What are their plans coming for the upcoming year? What are their plans for the next 5 years? Maybe even the next 10. You need to figure out what exactly the company is moving towards, who's in charge of the company, and who's going to be in charge is more likely going to be the CEO. The CEO is the head of the board of directors. The board is basically the people that are in charge of the public traded company. And you just need to figure out who's on that board, who's the leadership, and who's the CDO, where has he been in other companies, and how long has he been in that position, and what has he done while he's in that position. Is going to be huge to understand and to know when you're investing in a company. And when you're looking at the 10Q, it's a long document. Don't be afraid. It shouldn't take you. Don't expect that for it to take you a day to read. It may take you a week. May take you a month. May take you months to read. That's fine. The stock game is a very long game, and it takes time to understand. There's a lot of different measures that have to be taken. There's a lot of different moving parts, and so it's okay for it to take time for you. And when you open that 10Q, I want you to look at the first part where it talks about the business and look at what business they're in. You know, it's going to be in that very first part of the 10Q. You want to look at where they're registered in. It's going to tell you what products they sell, what they're actually in the business of. After you look at the 10Q, I want you to go to the 10K. I want you to go to the 10Q. The 10Q is actually the quarterly report that they have to submit to the SEC, and it'll talk about their recent quarter. It'll do exactly similar things that what's in the 10K, but it'll be just for the quarter. And the reason why you want to do this is sometimes the 10Q can be behind. So let's take a company that is their fiscal year. So their reporting years are based in May. So they report from May 31st to April 30th. Okay. I'm sorry, May 1st to April 30th. So that's the full year that they report. And the reason why this is important is let's take for 2020, right? We haven't made it to April. Excuse me. We hadn't made it to April. So which meaning that some 10Qs that may be out of date. Maybe that's the 2018. They haven't reported the 2019 because their fiscal year hasn't came up yet. So it's good to look at the 10Q. So after you look at the 10Q, you look at what they've done in the recent quarter. it'll be good to you if you go look at the earnings call. So the earnings call is basically a conference call that the CEO and the board of directors have with investors. And you can listen to it live sometimes. I know Robinhood will allow you to listen to it live from the app. Sometimes MarketBeat would also let you listen to it live. My favorite is Bora Earnings Call. It's an app that allows you to listen to whatever stock that you want to, just like you listen to your podcast. It'll let you listen to all the earnings calls, just like a regular podcast. You type in the ticker symbol, you select it, and it'll pull up all the different earnings calls. After you look at the earnings calls, now it's time to look at the financial statements. The financial statements is listed in the 10K, but sometimes the 10K, like I said, for beginners, it can really get very difficult to understand. So if you're a beginner level, I don't suggest you go through the financial statements on the 10K. I suggest you go to the financial statements on the Yahoo app. So you can use the app, or you can actually just go to yahoo.com or just search so-and-so stock and look at the Yahoo financials. So you click on that, click on the financials, and it'll bring up the three financial statements: the income statement, the balance sheet, and the statement of cash flows. And these three documents are completely different, and it depends on what stock you're looking at and what sector they're in. And the reason why that's so important is that you have certain sectors, especially the technology sector, that may have a lot of debt. So on their balance sheet, which discusses their assets and liabilities, they might have a significant amount of liabilities affecting the equity, okay? So that's something to look into. The income statement is going to be something to look into to see where their margins are, what their net income is, what their expenses are. Do they have a lot of expenses? Where's their revenue increasing throughout the year? Where's their net income increasing throughout the year? Because there's some companies that might have increasing revenue, but their net income and decrease because they had a lot of expenses. So that's something to look into. Something else to look into is this statement of cash flows. You want to see how much cash is coming through the business. Okay, you don't want the business to be specifically not having that amount of cash on hand. You want them to have a decent amount, especially in a time like this. You want them to have a decent amount of cash on hand, because right now, I mean, businesses are closing down. Like Best Buy just closed down all their stores, and I think they're only doing curbside. So that's going to affect their numbers. So you want them to be able to still pay all their liabilities and all the expenses with that cash that they have on hand. So that's the next step. That's the financial segment of analyzing a stock. The next step is really just to see if the company is doing well. So you want to see, what is the current news of that company? Is the news positive? Is it something like the airline stocks? Airline stocks are in a bad predicament right now. The airline stocks actually, they're losing money day in day with the closures of the coronavirus. So you should look at what is the current news of that company. You can look at the chart. The chart will show you how the prices of the company throughout the stock. Throughout the prices of the stock throughout the day or throughout the years. And you want to look at when it went down. Why did it go down? Look for news during that time and see why it went down. And then the next thing is, and that's the final thing, is to price out where you want to get into that stock. And this is going to be important. And it could get very difficult, especially for newcomers, of where to price it in, because you might not know. And there's a lot of different math and calculations. Maybe if you're doing discounted cash flow statements, or you're doing an intrinsic value, or you're just basing it off of EBITDA. There's a lot of different ways to do it. And I would suggest learning one way and focusing on that, and then maybe sector into some. But if you're a very beginner, you really want to get into stocks, you really want to look at the highs and lows. This is an easy way, basic way. Maybe not be the best way, but it's an easy way to figure out what stocks are on sale. Because I'm sure you've heard many people say that this stock is on sale or that stock is on sale. But the real way to figure it out is to see what's their actual value is. Because let's say a stock was selling at $300 before this down market, but its real intrinsic value is only $100. There's a $200 margin right there that you got to take down before you actually get to its actual value. And so let's say that stock was, like I said, it was $300, and now it's pricing at, I don't know, $250. You might say, hey, it's $50 off. No, it's still not, it's still 150 over what it's originally priced. So you need to figure out what is the actual value of that company. And the easy way, like I said, is looking at the 52 highs and 52-week lows. It'll tell you how high the stock has gone versus how low the stock is going. You want to look at stocks that are in that low point, because this is a good, that'll at least tell you, hey, at least I know I'm getting some type of a discount if you're looking at it from a basic standpoint. If you really want to get into the how much you're really getting a discount for what versus what the stock's value really is I personally use the discounted cash flow method to determine what the actual value of that company is. And that's how I analyze a stock, man. It's very important, like I said, to do that, especially when you're talking about pricing in, because pricing in can really make or break you. So let's say a person bought a stock at $200, okay? And somebody else bought the stock at $100. Let's say that stock is now, like I said, it's $200. It goes down to $80 to $180. That other person is down $20 versus this person who's still up $80. You know what I'm saying? So it's very important to you to value how you price in at a stock. And I appreciate everyone for listening. This is just a basic tutorial on how to value and how to analyze a stock.